Could AT&T stock be one of the best stocks to own as we head into a rate cut cycle by the Federal Reserve? We'll talk about that and more on today's show. What is going on, investors? Hopefully, you guys are doing well out there. We're picking up the story of AT&T, ticker symbol T. It's been a while since we've done a video on this company, but I tell you what, I think one of my most popular videos here on the channel ever was actually an AT&T video, and anytime we can get Lily in a title and a thumbnail, it's always a good day here at the Investor Channel. Look, over the last year, shares of AT&T haven't done well, down about 6%. Over the past 5 years, you're down 31%. Year to date, you're down. Any way you look at it with AT&T, you're basically down. Now, that doesn't include the 6%, more than 6% dividend yield you're earning on this company, and we'll talk about the dividend yield. We'll talk about interest rates as we move through the Q1 results, which came out before the bell. Revenue coming in right around expected, $30 billion. They did miss, have a double miss. They had miss on the bottom line, which would be here, and they missed on the top line, which would be here on the revenue side. Basically, no growth year over year. Now, when you start looking out future quarters for AT&T, it's a no-growth company. They have no growth, and this is why the company over the years have tried different types of acquisitions. They bought Warner Brothers to try to expand their media business. They've tried a lot of different things. It's just a no-growth business, and you see for the next several quarters, this is what is projected. Basically, minimal growth, 0%, 1% growth. If somehow this company could spur up some growth or trigger some demand, I mean, shares of this company would absolutely go flying because you're paying, you don't see this very often, especially here on the channel where we cover a lot of technology stocks. The forward price to earning multiple on AT&T is 7. That's right. Not 70 or 17. We're talking 7. We're talking bottom of the barrel type of basement valuation for this one. And let's go through these financials and see if there's any value here. And then we'll have to talk about interest rates as well, as the last time we had a gigantic move in interest rates lower, this stock went on a monster rally. So we'll have to talk about that and in context of AT&T, how they structure their finances. Now, again, revenue coming in basically flat. There's nothing going to be exciting here, $30 billion in revenue, but you do have profits. It's not like this company is unprofitable. They have to pay for some of the equipment that they set up at your home, the DSL equipment and all that other stuff, all the infrastructure as well. They have selling general administrative costs. They have sponsorship. They run ads on TV, all that different type of stuff. They have other costs as well. And what I did see over the last year, you had equipment costs decline. That might be partly due to the fact that equipment sales over the past year on a quarterly basis have declined. They were able to shave off some selling general administrative expenses as well, offset a little bit by some other costs going up. They also have this big depreciation and amortization. So this is a non-cash thing. When we get down to cash flows, I'll explain this a little bit more, but that actually rose 9%. So your total operating expenses for AT&T were $24.2 billion, basically flat, basically where they were a year ago. And so your operating income slid a little bit from $6 billion down to $5.9 billion. Now, all important for this company, and we'll see this when we get to the balance sheet, and you're probably aware of this company has a mountain of debt. We're talking about more debt than you typically see on a company, especially a one of this size and certainly of this market cap. Total company is worth $116 billion. Wait until you see how much debt they have on the balance sheet. So that all comes at a cost, especially in a rising interest rate environment, and especially for a company that doesn't have any growth, right? When you're Apple or Microsoft, you can borrow money relatively cheaply, even in an increasing interest rate environment, because shareholders are confident you're going to generate more revenue, more profits every single year. Investors pretty much know what they're going to get with AT&T, and can they push it higher? They actually can. It's a very difficult business to do that. So your interest expense over the last year, relatively flat from 1.7 up to 1.7 and some change. So that's actually pretty good. In a rising interest rate environment, not that bad. Now, let's get down here to the balance sheet. This is where things get a little ugly for AT&T. Your cash and cash equivalents, I say just $3.5 billion. Now, you got some accounts receivable. People owe you money. That's all good. You've got inventory at $2 billion. You've got some prepaid expenses as well. Your total current assets sit at about $30 billion. Now, where this company, where they sink all their money, you have to understand AT&T's business model, right? They have to get a license from the federal government for spectrum. They have to pay the government billions of dollars, in fact, hundreds of billions of dollars over many long periods of time. So they buy the access for the 5G network and the spectrum, and then they go and lease it to you, the customer, on a monthly basis, whether it's internet or it's phone or the combination of both. So they have 127 billion sunk in there, and then all of that takes a lot of property, plant, and equipment. They have to have the wires and the trucks and all the stuff to facilitate that. That also is where they sink a lot of their assets, over 127 billion there. So on the current asset side, the cash side, we have almost nothing at AT&T. On the hard asset side, you have a pretty big business. You have nearly $400 billion worth of total assets. Now, unfortunately, it's offset by a mountain of debt. To acquire this spectrum, to acquire the equipment and all the stuff, we had to take on a mountain of debt. Look at this, folks. Yeah, that's right. $125 billion worth of long-term debt, and then just maturing over the next 12 months is about $7 billion. And that's $7 billion. Yeah, that's right. It exceeds the amount of cash we have on hand, although we have obviously cash flow coming in and there are receivables as well. Now, it doesn't paint the full story. This is pretty ugly, right? Especially in a rising interest rate environment. What AT&T often was doing during a lowering interest rate environment or a dropping rate environment is they continue to refinance the debt. So they had coupon maybe at 3%, and then maybe they could refinance it at 2%. Now AT&T is going back to the drawing board, and instead of refinancing it 2, 3, 4, 5%, it's obviously gotten a lot higher. And the higher interest rates stay for longer, which is more or less what Jerome Powell has been saying is going to happen, certainly will impact AT&T, and that is the reason why. When you look year to date, shares have done nothing. Over the last year, shares have done nothing. Over the past 5 years, they've done nothing but go down. A lot of it has to do with interest rates and, in fact, the way this company is constructed. Now, from a cash flow perspective, I think you're going to want to see this. Okay, net income was $3.7 billion. If you're wondering where the heck did we get $3.7 billion, you come to net income on the operating statement. So you have your revenue, you have your expenses, you have your interest, you have pretty much everything that you need to pay, and then here's your net income. They make another small adjustment for a non-controlling interest. We will ignore that right now, but we pull down this $3.7 billion. Last year, it was closer to 4.5. So you come down here to your cash flows, you pull that number right at the top. Now, the beauty of AT&T's business is they have depreciation and amortization charge, and it's a big one. When we came back up here to the operating statement, you saw that equipment was a big charge, other costs are a big charge, obviously selling, general administrative, advertising, the employees is a big cost, but over $5 billion goes to depreciation and amortization, which is more or less an accounting method to recognize investments that they've made in the past, but it's not cash. The rest of the stuff is salaries, it's for equipment. This is actual cash leaving the company. This $5 billion actually didn't leave the company. It's just a non-cash recognition from accounting basis. So on the cash flow statement, we get to add this back in. So this $3.7 billion, $3.8 billion of net income, it's actually slightly more impressive when you factor in we've got another $5 billion. Now we've got some add backs and some subtractions, including some accounts payable, which offsets that a little bit. But here's your net cash provided by your operating activities at AT&T. Nearly $7.6 billion. And folks, that's like $1 billion higher than it was last year. Now, some of that has to do with the fact that depreciation was a little bit higher, but we've increased operating cash flow by $1 billion on a quarterly basis over the past year. Now, the good news is a lot of the spectrum and investment this company had to make to like roll out 5G and other services, that has calmed down a little bit. I remember when we were looking at this and they had these massive capital expenditure lines, now down to just $3.8 billion. Last year was 4.3. And again, we have to offset this by the fact that we just earned $7.6 billion of positive cash flow. We're going to burn through about $3.8 billion of that in terms of straight capital expenditures, reinvesting in the business. And so what did that allow AT&T to do in the quarter? They did repay some debt to the tune of $4.7 billion on the long-term side. Their short-term borrowings peeled off about $2 billion. Now, they did refinance or bring forward some new short-term debt, so that offset that a little bit. But overall, you reduced the debt by a little bit. You still were able to pay some dividends to shareholders, which is important considering the shares are going nowhere. So you do like this return, at least from a capital return perspective. Now, some of the thoughts that we have to think about AT&T is from 2009 all the way until more recently, but certainly on a monster rally the last monster rally that AT&T has gone on, we had 0% interest rates. And so who was attracted to buy AT&T stock were income investors, also income funds. So you couldn't go to money market, you couldn't go to treasuries to earn any income. So if you're a retiree or again, one of these funds that was trying to generate income from a dividend yield, you came to AT&T, you came to Verizon, you came to these high yielding stocks. Right now, with money markets yielding 4 or 5%, treasuries earning about the same, there's really no reason to take the risk on AT&T stock. As that risk peels back and as interest rates fall, it has a twofold effect on AT&T. It makes the equity more attractive because it has this high dividend rate. Funds, other people seeking income will be more attractive to come back to AT&T. The other thing it has, as we talked about, the long-term debt. As you refinance this, you're going to be able to refinance it at potentially lower rates. And if you refinance it at lower rates, well, all of a sudden your interest expense over at AT&T, instead of being $1.7 billion, might be able to go lower. And that is what could give you upside surprise, not necessarily on the revenue side, but on the profit side. You're seeing Wall Street anticipate essentially negative EPS growth for the next several quarters. You get positive EPS growth if you can do it from an accounting perspective where you have interest rates drop and it allows your interest expense drop. And then on top of that, you could potentially have greater demand in the shares as fund investors, income investors pour back into AT&T. And look, from 2009, when interest rates basically got slammed down to zero, you went from 7 all the way up to over $20 per share on this one. Certainly maybe not the best performing stock, but certainly great for AT&T standards. Now, more recently, we've been making an ugly technical pattern. Lower highs, lower lows. We're at the top of the pattern with AT&T, and it is more or less decision day for the Federal Reserve. Are they going to cut those rates? Are they going to do it multiple times this year? Is it going to be pushed out into next year? If you push it out into next year, I tell you what, your AT&T, you're probably going to come back down here and retest the bottom of this channel. But if you get a reversal in rates, that could be enough to send these shares higher, because again, from a fundamental basis, it doesn't get much cheaper than this, and you have some tailwinds potentially coming again from the inflow of capital from people seeking this dividend income, which they are safely getting in money market and other areas of the market. They could come back to AT&T, and then the lower interest rates obviously help this company from a financing perspective. That was AT&T. Hopefully you guys enjoyed today's video. We'll be back. That's a huge day. I think we've got Meta later today. Look forward to bringing that video to you. Until then, good luck with your investments.